please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
Markets are now starting with a slight tinge of red. It's a little deeper in the mid-cap space.
We are working with a target of about 11,100 to 11,300, and we expect those levels to come by in the next few weeks itself.
That I can assure you that any buyback promoter will not participate.
Markets are down just 12 points, so there is some amount of recovery.
Very volatile day today. What was interesting today was that you had a decline in the first half, then intraday recovery, and then in last hour the market once again fell. So if you see the chart of the Nifty, the Sensex, the mid-cap index, quite a bit of intraday volatility is what we had in today's trade. Of course,
Wild swings on Dalal Street as mid-caps take it on the chin once again. Mid-cap index loses over 1%, even as the Sensex and Nifty managed to end with minor cuts. In fact, Nifty Bank in the green.
Axis Bank and ICICI Bank lead the charge, keeping the Bank Nifty in the green. Shares of both banks ended higher by almost 2% each.
Aviation stocks nosedive in trade after Indigo posted a 73% drop in fourth quarter profits. Sources say fuel and other costs are only increasing as pricing war in the sector intensifies.
IT stocks see a big sell-off led by HCL Tech after brokerages handed a cut to the company's earnings expectations. Biocon also tumbled in trade after the US drug regulator issues 4 observations to its Bengaluru plant.
HCC stock plummets 25% after auditors of Lavasa raised the red flag on the company's ability to continue as a going concern. Just Dial, Century Textiles and Radico Khaitan also see some sharp cuts in trade. Well, those were the top 5 headlines from the day's trading action, and it was a hectic day of trading, with the Nifty in the end managing to end with only minor losses. Hello and welcome to Markets Today Talkback, the show where we tell you all about 8 hours of trading in just 5 headlines. I'm Lata Venkatesh, with me my colleague Prashant Nair.
Hi Lata, quite a volatile day as you said. Over the next 30 minutes we will wrap up the day's events and essentially top 5 stories as we always do. Our experts will answer your questions. Joining us to answer the questions today are Angel Broking's Mayuresh Joshi. Our technical expert Sudarshan Sukhani is with us as well. Gentlemen, thanks both of you for being with us here on the show. But before we start the Q&A session, let's quickly wrap up the day's events, both top-down and bottom-up. What happened? What were the highlights? Lata.
Well, we started off with slightly quiet or cautious cues. Wall Street, after the US Federal Reserve statement, actually went a little quiet. You saw red on Wall Street. Basically, the FOMC said that inflation is reaching 2%. Remember, in the previous statement, they had said that it is still a distance away from that 2% mark, which they want inflation to reach. So that kept Wall Street a little quiet. You could call it a hawkish statement. Asia also started cautious, but there the note of caution was exacerbated by the fact that US trade talks with China had begun. And Asia is keeping a very close watch on that. Many Asian countries who are traders with China get impacted. Europe also continued that caution. So basically, India did not have positive global cues. The Indian bulls didn't have positive global cues. But what really let down the Indian bulls was the bad news on a bunch of mid-cap sectors like aviation and sugar. Of course, Prashant is going to detail that a little bit more. It was the Nifty and the Bank Nifty which were an island of relative calm. The Nifty Bank in particular, because of the expiry reasons perhaps, you saw Axis and ICICI on the front foot, and because of that the Nifty Bank ended in the green. But basically, overall, the bulls did not have a great day. But stock-wise, Prashant?
I mean, IT, metals, IT, FMCG and real estate were essentially the pressure points. And I think in terms of stocks, HCL Tech was the big loser. I mean, it was almost down, 7.5%, 8% by the end. Wipro followed with 1.5% cut. Infosys, I mean, actually even Tech Mahindra was down about 2.5%. Then you had stocks like Eicher, Larsen, Asian Paints. I mean, just listing out the large cap Nifty stocks which ended with meaningful cuts. Large stocks which were higher, I mean, there was Sun Pharma, which ended up 4% by close, 536. I mean, it's whipped around this region for a while, but not convincingly taken this out. Bharti Infratel was up 3.5%. Tata Steel was up about 2%. And then, of course, as you pointed out, ICICI and Axis really contributing a fair bit to the market, to the bulls. Well, under pressure, and there was a fair bit. So, mid-caps were down 1%, full 1%. The index was down 1%. HCC, 26%. Jet Airways, 12.5%. Indigo, 10%. Indigo was down a lot more. Siemens India was down 6%. Radico Khaitan, 5.5%. Biocon, almost 6%. Reliance Infrastructure, Bombay Dyeing, Century Textiles, all in the between 3 and 5.5% region in terms of losses. And gains, I mean, look at what's happened to PC Jewelers. It, I think, got to the day's low, got it to the two-digit numbers, but it ended at 121, 10% higher. Edelweiss was up 5%. The stock actually was lower, but numbers came out. Management commentary was positive, was up 5 by close. And then you had Manappuram, which was up about 4.6% at 128 rupees.
Actually, the mid-cap cut was vicious, and now the mid-caps, I mean, for some time now, it's down for the week, down for the month, down for the year to date. And year on year, although mid-caps were the great performers of last year on year, the gain is now for the index down to 9%. Actually, the Nifty is doing much better with a gain of 15% year on year. If you just take, from May 2nd last year, May 3rd last year to May 3rd today. Well, let's find out what our experts have made of the market. Sudarshan, coming to you first. Nifty has moved a good 21 points below the 10,700 mark. So do you consider this buy attractive? Consider this dip attractive to buy, or will you shed long positions?
Well, good afternoon again. See, the markets are giving a sense that we are now facing significant resistance at higher levels, 10,800 or whereabouts. We had a trading range for 8 or 9 days and we broke out. And then we should have maintained that momentum. That did not happen. We have gone inside a trading range again, and that with resistance at 10,800 and support at the lower end at 10,650. Twice we touched that on Monday and today, 10,650. So the momentum is waning. In this case, it's much better to, as you explained well, to shed long positions and to step aside. In fact, if the Nifty goes below 10,650, that's the time when we want to start building short positions. So, markets change rapidly. That may not happen, but that is a strong possibility now. So, for the Nifty, I would be very afraid of taking long positions. Below 650, I am willing to take short positions. The Nifty Bank is a better story, but I don't think the Nifty Bank is going to do its own thing if the Nifty starts falling.
Okay, I mean, that is exactly the second headline of the day. So, will the Nifty Bank chart a different course as compared to the Nifty? The Nifty Bank outperformed the day, and the index ended in the green on the weekly expiry day, I mean, which was today. Axis Bank, ICICI Bank helped the surge. Both Axis and ICICI were up almost 2% in today's session. So, Sudarshan, exactly that point. What do you make of the Nifty Bank? Do you think it will do something different as compared to the Nifty?
No, you're right. It's shown a bit of green, but while other sectors were a bit dull. So I would not touch the Nifty Bank if the Nifty, because the Nifty is the primary index. It consists of many other influences. If the Nifty doesn't rally, I would stay away from the Nifty Bank. It may not be a short. We'll just short the Nifty, but I wouldn't buy the banks.
Fair enough. With that, Sudarshan, we go over to the third headline. Interglobe Aviation has hit turbulence after the company reported a weak set of fourth quarter numbers, a lack of management disclosure on declining yields, I mean in terms of which area, compensation from Pratt & Whitney, and the future leadership as well, now that Aditya Ghosh has resigned. All this spooked analysts, spooked investors, and the stock fell further. It tanked over 10% in trade, taking other aviation stocks like Jet Airways and SpiceJet also down with it. First up, let's go to Sonia, who follows this sector very closely. Sonia, tell us why Interglobe Aviation had to take it on the chin today.
Well, thanks a lot for that. You know, the one thing investor community has a very low tolerance for is low disclosures from the management and lack of clarity or lack of transparency. And that's pretty much what happened with the Interglobe conference call yesterday. Now, as we saw, the stock fell about 15% in one fell swoop because the investor community just did not get any reasons for a whole host of issues that are plaguing the company. So it started off with questions on why the yields have fallen. Remember, the yields for Interglobe have fallen almost 5.5% on a year-on-year basis. This is the highest fall we've seen in a very long time. This despite Interglobe being a market leader in various metro routes. Now, the management just purely said that, you know, yields are on a downtrend for the industry as a whole. Repeated questions were asked on that, but they paid no heed to that. Apart from that, you know, the Pratt & Whitney engine issue. Remember, there was that grounding of planes issue for which Pratt & Whitney, the engine maker, was supposed to make good some of the losses and compensate to Indigo. Till now, we don't know what the compensation amount is, and even after repeatedly asking at the conference call, the management said that they can't give us any clarity on that. Apart from that, you know, there was no explanation on what the future leadership would be, who the new CEO would be, no talk of Gregory at all, whether he would be taking over as CEO, etc. Also, you know, no talk on what the future strategy would be. There were just broad statements on how the growth for the company would continue, etc. No clarity on the SEBI probe, no other details on why the profits of 100 crores included a financial income of about 248 crores. So actually stripped of that, it's an operational loss. Quickly, I want to tell you what brokerages are doing. Most brokerages have cut their target prices on Interglobe Aviation. Credit Suisse has cut it from 1650 to 1575. IDFC has cut it from by 12% to 1293. Motilal Oswal says there's very little room for upside, and Citi has cut it from 1600 all the way to 1240. Back to you.
Yeah, thanks very much for that. I mean, we've got a question from a viewer. This is on Jet, but before I come to that, let me quickly, Mayuresh, get your views. 30 seconds. Interglobe, is it a good buy after the sharp fall today?
Evening, Prashant. No, I think one really needs to wait and watch, because what has probably transpired and what Sonia was saying in terms of non-clarity when it comes to the yield fall that you've probably seen, crude oil prices obviously have moved up. So the cost per available seat kilometer, including fuel, is also going to move up, though they have efficient engines. So I think the compensation part from Pratt & Whitney also comes into account. And what probably happens in terms of the leadership vacuum. So again, I think these are questions to be answered in a tough environment.
Okay, fair enough. Let's get to the question, the viewer question. Twitter user Karthik is writing in. He's got 100 shares of Jet, which he's bought at 738 rupees a share. He wants to know if he should continue holding the stock or sell. Mayuresh, what would you tell Karthik? Jet Airways.
No, so it's the same logic, Prashant. I think with crude moving up, again, the cost per available seat kilometer, including fuel, obviously is going to move up, and fuel prices are probably around 27 to 30% of airline expenses. What other expenses they can probably optimize? I think a lot of aviation companies are doing that. The load factors or the occupancy ratios have been pretty healthy, but what probably happens in terms of the available seat kilometers, that's obviously going to burgeon with a lot of local routes getting opened. International routes also are getting opened. So to that extent, again, I think the revenue per available seat kilometer should see an increase, but pricing environment will probably see that the expansion probably does not happen in a very expanded way. So a large element is that if he's got the patience to probably hold on, I think the stock has corrected quite meaningfully from higher levels. So if he corrects even further, he can probably average that out. But then he has to have the patience to probably ride over this crude oil rise that we've seen and some amount of compression on EBITDA margins that aviation companies might witness.
Okay, that will require a large heart and a large pocket as well. So, but that is the advice for you, Karthik.
With us here on Markets Today Talk Back, Mayuresh Joshi and Sudarshan Sukhani have been answering your questions. And we've been getting your questions over the last 15-20 minutes. We got through the top 3 stories of the day, so here's the 4th one. HCL Tech continued to extend its losses for the second day in a row. Steep cut. The stock dropped after brokerages cut earnings expectations following lower than expected organic growth guidance. Let's quickly wrap up what really happened and what was the cause of concern. Rima is joining in with exactly those details. Rima, over to you.
Hi, thanks so much for that. Yes, much lower in trade for the second day in a row. Ever since that stock hit its lifetime high of 1,106 a couple of days ago, the stock has been in a free fall. So yesterday, the management held a conference call post-market hours where they clarified that the FY19 constant currency guidance of 9.5 to 11.5% includes a 5.25% basis point, 5.25% contribution on account of acquisition. So 400 basis points on account of the acquisitions already concluded and 1.25 basis points from upcoming acquisitions, which means if you strip out the inorganic contribution to the guidance, we're left with an organic guidance of 4.25 to 6.25% for the company in FY19, and that is lower than street expectations. It would also mean that this company, which is growing faster than peers on account of a smaller base, up until now has slowed down significantly. For the second year in a row, that it would mean HCL Technologies' organic growth would be less than that of its Infosys as well as TCS. The company says that the weaker guidance is largely due to higher than expected and higher than anticipated pressure on large deal wins. Nomura has downgraded the stock to a neutral. The target price stands at 1,060 based on 14.5 times F520 PE. Kotak maintains a reduced rating on the stock, but they've cut the target price to 970. They say that the company could have, used their cash to build in positions where they were weaker, but instead this cash is directed towards non-strategic IP products as well as partnership. CLSA, on the other hand, continues to reiterate its buy rating on the back of strength in the company's digital portfolio.
Okay, thanks, Reema. That's a bit confusing, so let's get a technical advice on that. Sudarshan, HCL Tech has been struggling, although IT sector is doing well. What's the call for this stock for a positional trader?
Well, unfortunately, they become very different charts, Indigo and HCL Technologies. For HCL Tech, I would say the time is now to exit the stock. If you have long positions, sell them. If you have investments, sell them, step aside, because here there are better opportunities. TCS, Tech Mahindra and Infosys, all three have better, superior looking charts as compared to HCL Tech. Even independently, HCL Tech's rather dramatic decline on the back just of results tells us that the market is not pleased. So this is a avoid and a sell.
Okay, that's clear advice coming in from Sudarshan, and that gets us to the next story, the big story. The stock which was on the back foot today in a big way was Biocon. Biocon fell by more than 5% courtesy the US FDA, that's the US drug regulator, which issued 7 observations in a pre-approval inspection at their Bengaluru plant. My colleague Ekta Batra is joining us with what these observations were and how serious do they look. Ekta.
Well, yes, Biocon was a stock in focus today. That is because the company was reacting to news and an exchange notice put up by the company last evening that their Bangalore facility has been inspected by the US FDA, and this was in a pre-approval inspection. That means that it was for its biosimilar pegfilgrastim, and they have received 7 observations from the US FDA in that particular inspection. Remember, this particular cancer biosimilar comes up for review from the US FDA on the 4th of June. And hence this US FDA inspection would be important to assess what kind of observations they are and how much time the remediation could possibly take. Separately, the company, however, has mentioned that these observations are procedural. Additionally, there was more news on Biocon for the same facility where the European regulator re-inspected the plant after its first inspection last year, and they have issued 6 observations in this particular re-inspection that took place and was completed last month. The management says that none of them are critical.
Okay, thanks a lot for that. But running out of time, so let's quickly go through the last headline of the day. HCC stock fell over 25% in trade, the worst intraday fall in a decade. This comes after auditors of its group company, Lavasa Corporation, raised significant doubts over the company's financial health. How serious are these observations? What do they mean for the company going forward? Anisha Jain is joining us to decode all the legalese in that audit report. Anisha, tell us.
Okay, HCC was down about in trade around 25%. That after the auditors raised red flag regarding one of the group companies, which is Lavasa Corporation. Now, to put things into perspective, Lavasa has been in SDR since 2017, has been a subsidiary of HCC. Now, as of end of Q2, HCC owned around 70% of Lavasa Corporation. They had been working on a debt restructuring deal to bring down the debt and convert it into equity and bring their stake down to around 35%. We have been hearing a lot from the management, but nothing really worked out. And now we hear from the auditors that they have raised red flag and they have some qualifications as far as Lavasa is concerned. First up, they say that they owe some amount to the lenders to the tune of around 2,000-3,000 odd crores, but they haven't got direct confirmation from the lenders, and that's the reason they cannot vouch for that outstanding number. Secondly, they mentioned that there is some capital work in progress worth around 1,200 crores that has been the carrying value in the book, but they again say that they have no way to confirm that carrying value, and hence they cannot vouch whether that 1,200 crores should appear as an asset in the company's book or not. And lastly, they also mentioned that the supervisory and financial control of the company is weak. Now, the other observations that they make is that the net worth of some of the subsidiaries has been fully or significantly eroded, as well as the liabilities exceeding the assets over 2,000 odd crores. The auditors also mentioned that because of all of this, there's material uncertainty about company's ability as a going concern, and that is evident in the numbers as well. Because if you look at the FY18 performance, the revenue came down from 610 crores to 159 crores, and the losses have expanded to over 600 crores versus a 160 crore number reported last year. So this clearly has been a pain point for HCC. They have clarified and said that they're working with the bankers, but as of now, no resolution. Back to you.
Anisha, thanks very much. We've got questions. Our viewer Vivek Dutt has a question on HCC. He's got 1,000 shares of the company. He's paid 26 rupees each for them. I mean, price today is about 17, which means he's down some 40% from his purchase price. Been holding the stock for 2 years now. Wants to know the future for HCC. Should he hold or book losses here? Mayuresh, what are your thoughts?
Again, surrounded by all these news items, Prashant. So my own take is that have a look at a stock like L&T Finance. They just came out with numbers a few minutes back. Exemplary growth in terms of disbursements. The AUM has grown in excess of 25%. The asset quality has improved drastically on a quarter-on-quarter basis. So the GNPAs, which stood at 5.5%, are below 5% for this quarter. The net NPAs are down. The provision coverage has gone up. You're probably going to see increased advances growth, and exponential one at that, with the capital raising that they have done, along with exponential rise in the fee income as well. So NI's growth in excess of 25% odd, NIMs to be maintained between 5.2 to 5.3%, credit costs peaking out and coming down over the next few quarters, and on a price to book parameter trading at 2.4 times adjusted book. I think L&T Finance, in my opinion, would be a better choice for the investor over the next 9 to 12 months.
Okay, well, he's a Twitter guy, so I don't know whether his choice lies in finance stocks. But Vivek Dutt, not much hope on HCC, according to our expert.